Reports indicate that iPhone maker Apple might get a new boss next year. The American mobile manufacturer is accelerating its CEO succession planning amid signals that Tim Cook may step down as soon as next year. This according to a report in the Financial Times. Senior executive John Ternus is widely expected to be the leading candidate to replace Cook, though Apple is not expected to name a successor before its January earnings release. Remember, Tim Cook became Apple's CEO in 2011 after Silicon Valley legend Steve Jobs resigned, ending his reign at the tech giant he co-founded in 1976 in his parents' garage. And staying with news from the big tech in the US, Alphabet shares climbed as much as 5.5% on Monday after Berkshire Hathaway disclosed a stake in Google's parent Alphabet, one of the last major investment moves under Warren Buffett's leadership. Now, while Berkshire Hathaway has traditionally avoided tech stocks, Buffett argues that Apple is a consumer products company rather than a technology bet.
Alphabet shares rose 5.5% in pre-market trading on Monday. Investors jumped in after investing giant Berkshire Hathaway disclosed a stake in the tech firm. It marked what could be one of the final major moves by the group under Warren Buffett's leadership. A filing on Friday showed Berkshire owned 17.85 million shares in Google's parent as of September 30th. Reuters calculations showed the stake could be worth about $4.93 billion as of the stock's close. Berkshire's move comes as concerns grow over big tech's heavy artificial intelligence spending and whether AI valuations are too high. Buffett is due to end his 60-year run as CEO of Berkshire at the end of the year. It was unclear who made the specific purchase at Berkshire, though Buffett usually oversees the larger investments. Berkshire has traditionally avoided tech stocks. While Apple is the group's largest stock holding, Buffett argues it's a consumer products company rather than a technology bet.
And the world's first decentralized cryptocurrency, Bitcoin, tumbled to its lowest level in more than 6 months as risk assets sold off on fading hopes of a near-term Federal Reserve rate cut. The broader crypto market has shed over $1 trillion in value since its early October peak. Here's a look.
Bitcoin's price dropped below $93,000 Monday, falling to its lowest level in more than 6 months. The decline comes amid a broad sell-off in riskier assets. One trading director recently told Reuters that because Bitcoin and other cryptocurrencies generally move with the stock market, they haven't become an asset of alternative value to hedge against fear in other sectors. He added, quote, "If there is no enthusiasm toward risk-taking, it seems like that also translates into hesitation with Bitcoin and the like." Risky assets overall have come under pressure in recent days, as expectations of a rate cut from the Federal Reserve in December have shrunk, as a growing number of policymakers signaled an indication to hold off. Markets now price in about a 40% chance of a December rate cut, down from about 90% earlier this month. Since peaking on October 7th, the crypto market capitalization has fallen by more than $1 trillion, or about a quarter of its value.